Analyze Hyundai Motors numbers. Let me welcome on board the MD and CEO Tarun Garg, and here's a slice of their conversation, or rather his conversation with my colleague Sajit Mangat.
I think GST 2.0, led by the Honorable Prime Minister, was a big boon for the auto industry. Before that, as you know, we were hovering in a negative territory and the demand momentum was slow. But then October changed it all. And we are seeing a great momentum. Even HMI had a sequential 5% increase quarter on quarter in volume growth. And we saw a great December with very good retails happening, and that actually created space in the market and a positive momentum, and which is carried forward in January. And in January, HMI had the highest ever wholesales and of course highest ever total sales as well. So it has been a great momentum, and the best part is that pre-GST, it was only the growth was only led by SUVs, but now we are seeing other segments as well. For example, Aura saw the highest ever numbers in January. Of course, the new venue has had a great response with 80,000 bookings and the highest ever sales in January. So going forward, the momentum looks very good, and we are much more optimistic about the coming months and coming quarters than we were, say, 1 year back.
Sir, you spoke about the demand which has been generated out the GST 2.0. Are you seeing a sustained demand? I'm asking this because your overall volumes were around 11.5% higher in the quarter, of which domestic volumes, if I'm not wrong, it were around 4.8% or so. Do you think volumes are sustainable, and you're seeing good demand coming in every segment of the the car passenger vehicle where you are catering to consumers?
If you see, if January is any indication, then we had a very good demand. We had a sale of almost 59,000 vehicles, a year on year of 9.5%. So it augurs very well going forward. So while I don't like to predict the future, I can say the momentum and the sentiment is very positive. And also the today India-US tariff deal, while it does not really directly impact the auto OEMs, but the positive sentiment always does, because people buy cars when they are happy, when they are confident, when they are secure. And I think whether it was the budget or the India-US tariff deal, both have added to that positive, sentiment. So coupled by the GST 2.0 price, advantage to the customers, we believe that things are going to be positive. SIAM had a conclave about 2 weeks back, where all the auto OEMs were present, and we have all together forecasted a 5 to 6% industry growth for next fiscal, which is a very positive sign, and which is in line with the long-term CAGR of say 5%, which the industry has been clocking.
My question was with respect to the growth which we spoke about. The SIAM is talking about 5 to 6%. Is Hyundai going to grow more than the industry growth projected by SIAM?
Our endeavor is always to outpace the industry growth, and we have to be very flexible. And like I said, that GST 2.0 has really thrown in new opportunities, and Hyundai's advantage is that we are present in almost all segments. And the sedan segment, like I said, Aura is showing a very positive momentum. Even i20, the Nios, SUVs, of course, the contribution of SUVs increased to 70, almost 71% now for Hyundai. And the new venue has received a great response. So I think as long as we are agile, we are flexible, and we can take care of the opportunities which are coming our way, we can at least match the industry growth going forward.
Sir, export has been doing well for you. What is the kind of outlook that you have for exports?
So if you see exports, even last quarter was very good, a high double digit, and even in January we had a very high growth in exports, and more opportunities are coming our way. The new venue, which is exclusively produced globally in India, would again throw up more opportunities, and the new model cycle which has kicked in means that whatever new models will come in, we will look at export opportunities there as well. So India, as you know, is the hub for HMC, for the emerging market. markets, and we intend to really leverage those opportunities. And Middle East, Latin America, Africa, all these markets are showing a very positive momentum for exports. So I think we can hope to sustain this double-digit momentum, because at the beginning of the year we believed that probably will grow by 7 to 8% year on year in exports, but now we are growing almost 18%. So I think we will beat our own estimates for the fiscal 25-26 as far as exports is concerned, and the outlook also looks very positive.
And in FY27, do you expect to outgrow with this grow at the same level as 18 to 20% as well, FY27?
So look, it's very difficult, like I said, to project, the future. But January was very positive, and let's see, how we can maintain the momentum. There will be more opportunities, like I mentioned, coming in with every new facelift or new product comes in. You get more and more opportunity for exports as well. That is the strategy we have been following for the past 3 decades in India, and going forward, since our product cycle is very strong, I think that will be an opportunity for us in exports as well. And now we have a headroom in capacity also with the Pune plant coming in. So that's an added advantage to us.
Sir, I just wanted to check with the Pune plant also, but before that, I just want your thoughts on the cost inflation which is coming in. That's putting some pressure on the margins. Do you expect this pressure to be managed so that the margins are maintained at the current level?
So look, our endeavor is always to do cost optimization, localization, so that we don't have to pass on the burden to the customer. And commodity prices are not in our hand, and they keep on fluctuating, especially considering the volatile geopolitics. I think today India-US treaty has come in. That should be a big support in terms of commodity prices. In any case, last 1 week has seen the precious metals coming down. So we hope that that kind of benign conditions prevail. So, and our effort, like I mentioned, would always be to take all the cost optimization measures so that we don't have to pass it on. And unless it becomes imperative, we will like to maintain the status quo as far as possible.
You spoke about the Pune plant. How is it coming through, and is there initial cost that would be absorbed, and as a result of which there will be some pressure on margins because of that?
Yes, absolutely. In fact, the Pune plant, I'm very proud to say that two-shift operations started almost immediately. And, so we sold 12,000, more than 12,000 venues, the historical high. So Pune plant has really, really positively surprised us, which is very good. And in terms of margins, like we mentioned in the call yesterday, the initial impact we believe is about 1%, and which should last about a year or so, which is perfectly fine, because the plant is not there for 1 year or 2 years, and plant is there for many, many years, going forward. So we are broadly in line in terms of processing costs as per our estimates. And like I mentioned, the ramp up has also been very good, and we are looking for opportunities to further increase the production, considering the huge demand that we are getting for the new venue.
You will be able to fully utilize the capacity in within 1 year. Means we will go to optimum capacity in within 1 year, or will it take some time to gradually go to the full capacity?
So, like I said, look, it's always to go. It's very important to really maintain the quality levels and go steady. And it's not very often that we start two shifts so fast. So we started two shifts, and the results are very, very encouraging. And we will see that how going forward, we can do. Currently, we're already, looking at about 130 to 140,000 venues with a two-shift operation, which I think is very, very good from every benchmark that we have done in the past, or even from the global benchmark point of view.
Sir, you've laid down a very ambitious path of meeting 15% market share by FY30. What will it take to reach there? You spoke about being agile, being flexible, so that you can manage the entire environment. How are you seeing models coming up, and how many models are you planning to bring in by FY30?
So we have a very comprehensive plan, which comprises of course, products, where we said that 30, by fiscal 3026 launches. Then, of course, green technologies. We are going into hybrids. We are going into EVs. We are going to CNG. In fact, what we have announced is more than 50% of our portfolio by fiscal 30 would be green. Then we are looking at increasing exports, from the current level of 24% contribution to 30%. Then the how to take advantage of the HMG group synergies, in terms of Hyundai Capital supporting us, then in terms of localization, in terms of dealer network and district coverage, in terms of customer experience, in terms of highest levels of quality, in terms of brand, in terms of CSV, of course, being led by an Indian for the first time in our history of 3 decades. So I think we have a very, very comprehensive plan. We want to be truly a very strong Indian brand, and we want to leverage all the strengths that we have globally to increase our market share volumes, and also become a very, very trusted brand in India, which we have, of course, over the past 3 decades, got a lot of equity and a lot of love. And we want to really take it forward. And I would say that this is the beginning of Hyundai's second phase of growth in India, especially with the Pune plant kicking in and 45,000 crore investment that we have charted out for the next 5 years.
Sir, my final question to you is with respect to green portfolio. You spoke about it briefly, saying that 50% of the new launches would be in green. Can you give us some idea of the kind of price bands where these launches will come in, and from a portfolio point of view, which are the bands where you would think that you need to bring in the launches so that you can compete with other players in the market?
So look, like I said, more than 50% of our volume by fiscal 30 we're targeting to be green, and we are agnostic to technology because our parent HMC is very strong in electrics, very strong in hybrids. Of course, they have supported us in CNGs as well. We have petrol, we have diesel, we have everything. And going forward, we have launched a very ambitious plan for hybrids. We have said that we are going to have 5 EVs by fiscal 30. Of course, our first dedicated EV is going to be launched in early 27. That's going to be a very strong foot forward. We have seen, even from a TIV point of view, from 2.5% in calendar 24, in calendar 25, the TIV, the EV penetration has increased to almost 4.6%, which is a very positive sign. And as more and more models come in, and as PME drive scheme gives a big boost to the infrastructure, and of course, along with the private players, for example, even Hyundai, we already have more than 120 DC fast chargers. Going forward, we are going to have 600 DC fast chargers by 2032. We are looking at the supply chain as well. The battery packs have been localized. We are looking at how we can bring the cost down. We are looking at the entire ecosystem there. So very, very comprehensive plan, and along with strong hybrids, which will kick in and which will give us support. I think we will have a very strong presence in the green fuels going forward. And additionally, of course, in terms of energy needs, we're also working with IIT Madras on the hydrogen ecosystem, which will again, as a corporate social responsibility, a big step in terms of supporting in the India's energy needs.
Okay, that's an exclusive conversation coming in with the Hyundai India management.